Has President Trump folded like a cheap suit, or did President Trump just run the art of the deal on our trading partners? It's going to be very interesting to see each side have this discussion. You will undoubtedly have many claim that President Trump folded like a cheap suit. He gave up. He got a little pushback from Wall Street, and he does what he always did. And on the other side, the mega side, you are going to be saying that President Trump ran the perfect art of the deal. What am I talking about? Well, as of this morning, we are hearing more and more from Scott Bessent that our trading partners are eagerly reaching out to negotiate fairer trade. Where do I fall in this? I don't freaking care what side of the equation you are on. I'm an American. I want fairer trade. And if this is how we get there, I don't really care if he folded like a cheap suit or if he ran the art of the deal. You do you, and I will be worried about my family and what I should be doing. It looks like the team is getting ready to present plans to President Trump on who and when serious tariff talks will start. It appears at first cut that Japan and South Korea will be the first trading partners to have meaningful discussions. There is no question that the big elephant in the room is China. China, as of yesterday, threatened a 50% tariff as reciprocation. President Trump came out this morning and said, go for it. I will give you another 50%. Scott Bessent, once again on national television, talking about China having a bad hand, something that they really can't negotiate. Why? Well, as of today, China runs a $300 billion trade imbalance, meaning they send more stuff our way than we send their way. In fact, according to Scott Bessent, the trading, we export one fifth of what China exports here. So if you want to go tit for tat on tariffs, you will be playing a losing hand. That from Scott Bessent. Again, we are going through it. The first 6 months were going to be chaotic. As I've said all along, the last 3 days have been particularly chaotic. But again, the plan, the outline seems to be coming into focus. Again, it won't be over in a day, won't be over in a week. This likely has months to get through. But again, it does appear that there's a little light at the end of the tunnel. To that end, it looks like the market, again, I didn't check here recently, but the stock market was up big pre-market. I didn't check. I was too busy reading, frankly. The thing that I noted this morning was the 10-year note. Has anybody looked at the 10-year note today? It was all the way up to 4.25, 4.25. On Friday, it hit a cycle low of 3.9. I want to put that in context. That is a 35 basis point move in less than 2 trading days. So again, as we have mortgage people on, Convoy Home Loans, Matt the Mortgage Guy, Velocity, Lending One, it's, if you like it, lock it. I fear that many of you once again saw the trending rates going lower, and instead of locking, you chose to float. Yes, rates can fall quickly in this wild environment, but they can rise just as quickly. If you were thinking about locking a loan on Friday at 3.9 and you gambled, you lost. You lost big time. This is a massive move. So once again, folks, if you like it, lock it. If the numbers work, don't try to gamble in this environment. Rates can move pretty violently. What else is going on? It looks like Micron is deciding to impose some tariff-related surcharges on some of their products. The reason I think Micron is putting a surcharge on products is because they believe these tariffs will be over soon, and then they could drop the surcharge, as opposed to going in and changing prices, right? If you go in and change prices, you raise them to include the tariff, and then the tariffs drop, you got to go and lower it. It's a big, big mess. So I suspect a lot of tech companies to follow Micron's lead and have a surcharge and then drop the surcharge should we have a positive outcome to tariffs. We did get the small business optimism survey today, and it was ugly. Again, I don't know how it couldn't have been ugly. In fact, I'm surprised it wasn't more ugly. Maybe we will get some carry through in next month. I don't know when this survey was taken. I'm going to guess the survey was taken pre-tariff announcement, so it had a timing lapse. So I would expect next month to be pretty ugly. But the small business optimism came in at 97.4. Again, like most of these numbers, folks, don't geek out on the number. Look at the trend. Look at the expectations. That's what's important for us. So again, came in at 97.4. It was expected to be stronger at 99. And last month it was 100.7. So again, noticeably weaker. The thing that I noted in the survey is at 97.4, it is below the 51-year average. The 51-year average for the small business optimism survey is 98. So we are just below that survey. Concerns by small business, probably not to be surprised. Taxes, labor quality, and inflation. Goldman Sachs head of risk management came out with a doozy. Goldman Sachs head of risk management said it is time to start scaling in. Interesting. One of the podcasts I will be listening to later today is with Ed Milet and Morgan Housel. Hopefully I'm pronouncing that correct. And the reason it caught my attention is actually a question I want to ask you, because I think it's going to be very interesting to see where my audience is at. And basically this thumbnail said, I think it was the thumbnail, said, what is driving you? What is driving you? Is it the fear of being broke? Or is it the desire to be rich? To me, that was a very interesting question. And probably most of you could guess where I come from. Again, my positioning is I was afraid of being broke. I simply wanted more options. I wanted a better retirement. I did not like how my youth was good or bad based on whether we had money or not. So my fear is not being broke. But I've met plenty of people that have the desire to be rich as their driving force. So I'm just curious where my audience at. Are you afraid of being broke, or do you have a desire to be rich? Let me know in the comments below. I'm just really curious if maybe I'm the oddball and or maybe not. So I'm just curious. Folks, I want to let you know about a podcast I was on. I'm going to ask for your help. I was on a podcast called Soar Financially, SOAR. Take a look, Soar Financially. It is a podcast based out of Europe. The podcast generally talks about gold and things of that nature. They just had Melody Wright on the channel, and that video popped off, so they invited me. Based on the early indications of comments, the users or followers of Soar Financially don't like real estate investors. They have said some really bad things. So I would love to get some of my followers to check out Soar Financially, maybe add a nice comment or two so it's more balanced. That would be appreciated. It was about a 45-minute conversation. It was really talking about why 2025 is the year of the investor, why 2025 is going to be hard for homeowners. And boy, did their audience not like me. So do me a solid. Take a view at Soar Financially. Again, SOAR Financially. I would greatly appreciate some love. Don't do me a favor. Don't get engaged with the trolls and the haters. Just put up a positive comment and then go, about your day. No need to defend me. No need to go into all of that back and forth. Don't waste your time. trolls are, just crabs in a bucket. I'm not worried about it, but I would love to get some more balance in there. That would be great. Got some news from Larry Fink. Larry Fink out talking big. Larry Fink says most CEOs he talks to say we are in a recession right now. That's going to be very interesting because, again, I think Q1 is going to be a little distorted because of auto sales and things of that nature at the end of the quarter. I think it's going to cover over what would have been a negative quarter just because we pulled forward demand because of tariffs, but we shall see in a couple of weeks. But yeah, I think a recession with business confidence, investor confidence, consumer confidence all going the wrong way. I frankly don't know how you don't have a recession, but we shall see. Larry Fink says, not ruling out another 20% down in the market. Ouch. Right? We've already suffered, at least before this morning, a 20% drop, and he's not ruling out another 20. This one might catch your attention, folks. This one. Larry Fink says, and I quote, Powell may have to hike rates in 2025. The market, folks, if you don't forget, is expecting 4 or 5 cuts. And Larry Fink comes out and says, you know what? We might have to hike in 2025. Next up, Larry Fink, as you probably would have guessed, the market thinks the Fed is going to cut 4 times this year. Larry Fink says, I see zero chance of that. One more from Larry. I am much more worried about inflation and rates going higher than I'm worried about the Fed making cuts. So you know where Larry comes out on this stagflation. He says that the Fed's going to fight inflation, the job market be damned. President Goolsbee says global trade war eruption may lead to consumer behavior shift. Goolsbee, there's no question that a trade war would change consumer behavior. I would argue it would change investor behavior, small business behavior, big business behavior. A trade war is not good. We learned that in Econ 101. Lastly, from Goolsbee, significant tariff retaliation could boost inflation. It will also destroy demand. It will be demand destructive. In fact, if this trade war takes off and really sinks the teeth in, it is not impossible to get true deflation. I'm not talking disinflation. I am talking deflation. If the consumers, businesses, small, large, government sit on their wallet, you really could see deflation. Fed President Kugler, uncertainty is holding back business investment. Again, guys, it's not only business, it's consumer, it's government, it's all of this stuff. Here's the one from Kugler that I agree with. Q1 may show more strength than we imagine. Again, I think that is going to be distortion about the last week of the quarter where a lot of folks made capital decisions and pulled forward demand. There seems to be a front loading of auto sales. Again, I would argue not only auto sales, but capital equipment and things of that nature. We have already started to see some price increases, aka inflation. I do want to call your attention to a very important video that went on my channel yesterday. It was with the one and only Brian Adamson. Brian Adamson has made a significant change in his real estate. He is now selling 100% of his portfolio. Without stealing the thunder from the video, because I do want you to watch it, I think you should see it. I think you should understand why Brian is selling everything. I mean, lock, stock, and barrel. He is selling all of investment real estate. I think you need to go look at that video. I think you need to understand what he's doing. I think you need to ask yourself, is it the right decision? Again, go take a look at that. Brian Adamson is selling everything. I do want to congratulate 2 people for joining school. I want to congratulate Bryce and KP. KP joined. Again, folks, I will be going live again on Sunday at 8 a.m. as a special bonus to our school community. Last week, we went for an hour. I think there were 15 or 16 folks. I'm an open book. We can talk real estate. We can talk YouTube. We can talk health, whatever you want, travel. I just want to interact with the school community. Again, 67 pennies a day, thousands of dollars in education. I do want to thank folks for watching the videos. Again, there is a huge list of videos in there special for the school community. I love when you post comments because those videos are private on YouTube. You guys are the only ones that can see them. So again, if you leave a comment, I will see them. Lastly, we will close out with what's going on in real estate. Mike Simonson, once again, every Monday. I appreciate you, brother. 72,000 new pending contracts. That is up year on year. Again, 72,000 pending contracts. 72,000 new listings as well. So we are seeing more and more. We are in the spring selling season. And then finally, 691,000 active listings. We are up 35%. Again, folks, remember my thesis. My thesis is we are in a buyer's market. My thesis is 2025 is the year of the investor. Again, what do we want? We want less competition. We want more supply. And again, we want the ability to do the work, right? Disrespectful offers, follow up, create great deals. Folks, it is our time. I hope you are doing the work. I hope you're writing offers. I hope you're following up. And again, join school. We will go live Sunday morning, 8 a.m. Pacific. Take care of yourself. Have fun. Later.